The following is a presentation of TFNN. The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN, and I think the most important thing that's happened today is the fact that silver hit the exact 61% retracement from that high we made way back in October and in September, and it hit it to the exact within 10 cents, and it's broken, over 10% in a matter of a few hours. It went right down to the last area of support, which is down around that 33 level. But what I was trying to focus on today's show, I try to keep it a little different because you get tired of listening to my ABCD patterns and the overbought indicators and the divergences in the NASDAQ. All that stuff is still there and everything, but it's really it's about a lot of different markets. And I wanted to focus on Forex today because that's a really easy market to trade. And those of you that trade stocks, Forex is by far easier to trade because it's 5 hours a day, and it's 5 hours a day. It's 5 days a week, 24 hours a day, and so I don't want to step on anybody's toes here, but you ought to be be aware of the possibilities here, and I wanted to show a few examples of that. But I have an interesting story to tell you. Most of you that do know me, that I'm not a techie. I don't have a fancy iPhone or any of these phones. I've never had a text message. I don't do social networking. My little telephone is an LG $20 phone from Walmart, and I had to get new because I've been traveling. I had to get minutes, and so I went over to the Walmart, and I went in, and the young lady was about 20 years old, and I told her I needed minutes, and they had a special for $25 for 750 minutes, and I said, look, I really don't know how to do this thing. I said, can you show me how to do it? So she takes the telephone, and she's got a Bluetooth on, and she must be some type of a manager or something because she's talking to two clerks. She's signing papers. She's trying to program my phone, and she's talking on the Bluetooth all at the same time. She's working. You talk about multitasking. This woman was doing probably 5 different things minimum. And I'm saying, oh, my God, here I got somebody obsessive-compulsive that is, totally, dyslexic, and here I'm trying to get this thing programmed. I said, I'm going to be here an hour. In about 15 seconds, she hands me the phone, and she says, here, it's all ready to go. And I looked, and I said, yeah, it's 750 minutes. I said, man, that's pretty good. I said, why are you working at Walmart? I said, why don't you go to work for a law firm, or something, where they can use your talents? And she said, excuse me? She says, what do you mean, work for a law firm? She says, don't you see that I'm black? And I says, what's that got to do with anything? And she says, mister, she says, what planet are you from? And I said, well, I'm from this planet, I think, but, other people might disagree with you. And she said, no, I have no opportunity to do that. She said, I got 2 little kids. I'm 20 years old. I can't, I just didn't even get out of high school. And I said, but you're so smart. And she said, well, I'm working for $8.75 an hour. And I said, okay. I said, well, I hope you get to go to school someday because you're a very smart lady to do all these things at one time. And she says, I'm not even a manager. So I said, I'm walking out the store, and it's a big Walmart. So when I get to the front of the store, I go up to the manager. You guys might think this is boring, but it's not for me. So you're going to have to listen to it. So I go to the manager, and I got her name, and I said to the manager, I said, sir, you've really got a great employee back here. I said, her name is Esther, and I said, this woman really should be promoted because she is really a smart cookie. And, and he said, okay. He said, I'll put it in my file. I said, don't you want to know her name? He said, oh, it's not necessary. I said, whoa. I said, Sam Walton would not be very happy with you. And he says to me, who is Sam Walton? And I said, do you know the name Walmart above this store? And I said, yeah. And he said, yeah. And I said, well, that was Sam Walton. And I took this guy's name down, and I wrote an email to the company, whether it means anything or not. But that tells you a little bit what's happening in the economy, folks, and get back to realism because, boy, oh, boy, it really shook this old cowboy up a little bit. Anyway, what happened today in the silver was very unusual. It hit that 61% retracement, and it dropped 10%, a little more than 10% in a matter of a few hours. Now, it's a very important level there, because if we do get above that 37.40, that's going to change the whole thing. But gold dropped $50. Silver dropped a lot. Even bonds, I would thought bonds would have started to go up, but I guess the helicopter Ben must have said something to make the bonds sell off a little bit. But they're just in that same retracement level that we've been in for quite some time. So that's the main thing that we got to keep in mind, that something big probably happened today. I didn't have anything as far as cycle-wise coming in. All I know is that a lot of these patterns that we've been talking about, have still been in the same area, and they haven't really done very much, at all. But what I wanted to do today was just talk a little bit, about the fact that, we're looking at these currencies, and they're really a good thing to trade and everything. And so what I did this morning is I posted a pattern that I saw early in the morning, and I wanted to, give you an idea of, what the pattern was. Everybody knows it's a Gartley pattern that comes to the room and stuff and things like that. But you'll see that the euro at that time, early this morning, was trading up around that 34.70 level, making a beautiful AB equals CD pattern. Well, as those of you that have been following the market, the euro just totally collapsed from that level and dropped well over 100 pips when everything else was, going down. So this was just a pattern, that we look at, and if you don't have to use 5-minute Forex, you could use 15-minute if you like, or you could use hourly, but it follows these patterns a great deal. They're not, foolproof by any stretch of the imagination, but they do give you some, advantages when you're looking at, trying to find some short-term indications for trying to make a interesting spot to get in. We've got a a caller from Philadelphia. John, are you there?
I am, Larry. Good morning to you.
Good morning to you. What can I do for you?
That is a great Walmart story.
I was shocked. I honestly was. And as you know, John, I'm in Philadelphia, so it was a Philadelphia Walmart over by the water, and it was really something. So. What can I do for you?
Yes, sir. Larry, I've heard you talk numerous times in the past. You've applied it to silver and gold. You've mentioned wide-ranging bars. Today certainly qualifies in both gold and silver, just for the record, made new rally highs since those December lows. And these daily bars are, wide-ranging. It's textbook here. Question for you. Now that you've got that, do you have any traders' rules of thumb that you've learned over the years that we can apply now, looking to for guidance as to what's likely to happen the next week, 2, 3, that sort of thing?
Yes, we do, and it's really it's funny that you mention this, and this is really not a setup, folks, because I do know John. But yesterday I had lunch with Dr. Steve Shapiro, who was the first person to talk about the wide-ranging bars because of the Shapiro iteration. It was in my very first book. And Steve and I went to lunch, and we've been friends for 35 years. And he's the one that took me over to the Walmart, and he waited in the car while I went in to do this. And he's going to be my guest on the commodity show tomorrow. And he's the one that originally talked about these wide-ranging bars, because he would come into my trading room on the beach there in California before he went to teach at Cal Poly University, and he would trade with me in the morning, probably 4 days a week, and we would chat, and then he helped me edit my first book and things like that. But the funny part of the story is that he was watching these wide-ranging bars, and my losing trades would always be these wide-ranging bars. I'd be buying into D as a wide-ranging bar, which is usually 3 times a normal bar. Mm-hmm. And he said, "Why don't you just wait for an iteration?" And I looked at him and I said, "What kind of word is iteration?" I said, "I never heard anything like that." And he said, "That means you have to wait 1 unit." And I said, "Why don't you just say wait 1 unit as opposed to a big word like that?" He said, "Well, I'm a college professor." So anyway, he's going to come on tomorrow, and I'll ask him to tell a story about that. But really, what the answer to it is that after you have these wide-ranging bars that are usually 2 or 3 times normal, and they happen very quickly, like what we've seen today, you should wait for one bar. A doji or tweezer. That's the ideal. What that does is it keeps you from catching a falling knife. Which is really difficult. Once in a while these comes down and they stop right on the money, and then they turn right back up again. But frankly, most of the time they give you too much heartache to even to even do it. So if you wait 1 or 2 bars, and if you miss it, the market usually will go up a little bit and then pull back one more time to a 618 retracement to let you get in. So
right.
The most people have trouble with wide-ranging bars because they don't respect them. And boy, that's one thing that you really need to respect. That's my opinion.
Well, thanks for that answer. And I'll tell you what, I will personally look forward to that Shapiro interview tomorrow.
Yeah, Steve he's a real kick in the pants, and he's got a great sense of humor, and he has beaten MS. He wasn't able to walk a few years ago, and now he's gone through some very radical treatment, and it's actually he's able to walk. I saw him walk for the first time yesterday, and it was really he doesn't walk fast, and he doesn't have a lot of strength, but he's walking. He's not in a wheelchair anymore, so it's real interesting to to see his health get a little bit better, and he's close to my age, so it's not easy when you get up in the the higher years.
Well, good for him, and thank you so much. I appreciate it, Larry.
Yeah, thank you, John, and good luck to you.
All righty.
Okay, we want to get back to the currency market because we've been talking about the Japanese yen for quite a while now, and we've been watching the long-term chart on this going back to 1970 when the yen was trading at 360. And now we've got it down into the 80 level, and this is what we're looking for, a huge move coming out of this yen. We were talking about it when it was at 76, which was the 786 retracement. It stayed there for 4 or 5 weeks, which was an ideal situation for something like this, and this is why we're looking at it so closely now, is because what we want to try to do is to take the yen and look at it, on the longer term, go back into the shorter term time frame and see that, what has happened is that we've had this, really big move that has gone all the way up to the 1.618 expansion of the move from October. And this is telling us that, this is really a big move starting, and what we want to do now is, is to try to buy it if we can get a pullback, into the 79 to 78.50 level. That would be an ideal place, to take a look at that. Now, this chart that we're looking at here in the Japanese yen that I put into Tiger TV, this is very similar to what we're assuming is going to happen in the natural gas, and that's what we're going to be talking about on the show tomorrow. Is we want to watch that natural gas because that's in the commodity department. And we want to, show you the same type of pattern that occurred, because this pattern that we have in the Japanese yen down at that 76 level is the same pattern that the natural gas had at 245. We've got to pay a few bills here for Mr. O'Brien, and if you have any questions, it's 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and someone just threw the gauntlet down to the old cowboy, so I'm going to take it up, and this is going to get me in trouble. This might be my last show for TFNN, but what the heck, I was looking for a job when I found this one. Okay, someone said, all right, we've been on this show and you've put Apple up a few times, so what I'm going to do is I'm going to show you the same pattern in Apple that we had in the Euro. It's exactly the same pattern. It's an AB equals CD Gartley pattern. The Apple got up to that 543 level and a half, 543.60 level. That was a 61% retracement. If we get it above 545, that means it would be be a failure of this, and so we will see if this is going to work. I don't know. It's just another pattern, but we want to look at it. I think it's important enough that we keep an eye on it, and we'll see if it does do anything. But the one thing I want to get back to, because I love Forex so much, is I want to show you the Euro, what really happened with the a little bit longer time frame. This is a 30-minute, and it's basically showing you that pattern that we looked at. You can see the colored, when you go into Tiger TV, you'll see the Gartley pattern that it made up around that 134.70 level, and then it dropped all the way down to the 133.50 level. That's $1,400 in a matter of 2.5 hours. That's the equivalent of Apple moving $14. And so it does move around, quite a bit. So that's why we want to, keep an eye on these foreign currencies, because they certainly have some really good opportunities to do that. They're so much easier to trade than the stock indices, because you have so many things to choose from. You could pick the British pound, you could pick the Australian dollar, Canadian dollar, any of these things. They all follow the same patterns. And remember, these patterns they're certainly not foolproof, folks, but they do give you an advantage, a trading advantage, and the advantage that you have is the fact that you're able to take a look at the patterns, and you'll see that sometimes they're going to work, sometimes they're not going to work, but the probability of winning is greater than the probability of losing. It's like if you were playing blackjack and you had an ace every time, and the dealer has a 5 up. Well, that's a tremendous advantage. However, if the dealer turns over a 6 and you have a 4, the advantage is gone. With our business, we can actually take off, the trade and don't even have to gamble. We can take our money off the table. Whereas in gambling, once the turn of the card starts, the spin of the wheel, blow of the whistle, toss of the ball, it's out of our hands. So this is the big difference between what we have, with the gambling versus speculation. There's the only way they have any interest at all together is the fact that the interest is in the fact that they keep score with money. That's the only reason that they have this thing going the way that they do. So we'll talk a little bit more about the yen because I'm watching it very, very closely. Today we've had a pretty good correction, back to the upside. If the yen goes above the 82 level, folks, it's going to be in a really running market, because it was up so many days in a row. It only backed off a day and a half. And these currencies, because, the governments of these currencies come in and they do these, just like QE3s or whatever you want to call it, they have a tendency to go a long way. And remember, the high on the Japanese yen is 360, and it's trading right now at 80. 81 and a half or something, so this has got a long way to go. Much like we have if the natural gas is bottoming, like, what we think it is. So, we'll just have to wait and see, if that's going to be the case or not. Towards the end of the show, I want to talk a little bit, about the stock market, of course, because this is a pretty wild day. It's not over yet, so who knows what's going to happen. And then we also have to talk at the bond market and see what's going on there. The bonds have actually held up pretty good. I'm going to have to come to a break here pretty soon, so I'm not going to talk about the bonds till after the break. But I'll show you the pattern that we're looking at there. We had a lot of resistance up at that 144.14 yesterday. That was another Gartley pattern that had occurred, and now we're getting back down into the support range to see if that's the case. The real thing to watch today, folks, is if this gold and silver, and it's possible that they could do this too, if they reverse and go back and make new highs, do not be short these things, because these things could run like the old deer with stripes, because they're very, very important that they hit those numbers and then backed off. And if they go above those numbers, that's telling you that the numbers have failed, and they're going to take off and go a long way. Now, we're going to have a break here, and we're going to talk about the U.S. dollar when we come back, and then after that we'll talk about some bonds. Any questions? 877-927-6648.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. If you have any questions, it's 877-927-6648. And the next thing we're going to look at is the dollar. And the dollar index has held that, that long-term AB equals CD level up at 82. We're in the midst of a bearish Gartley forming now, where we believe we have a chance to get down into that 76 level. That would complete the ABCD. This is a longer-term chart. That's really, what we're focusing on here. The dollar still has a chance to, if it gets above 82, folks, the dollar could really, really go, because, it's had as high as, 115 against the euro more than once, and so it could very easily, make that level. And so we'll take an eye, keep an eye out for that to see if it, in fact, is going to happen. Also, someone asked me, he said, well, you talked about the euro, why don't you, pick out something else of one of the currencies, and so all I did was I went in and I took the Australian dollar, and I'm going to show you if you go into Tiger TV, you'll see over the last several days, it's made that AB equals CD thunderbolt pattern right up at the top. And then today's correction was exactly, 786 from the previous low of yesterday. That was to the exact pip. And if you just added, some little cycles of, one-day cycle in there, you'll see that the timing came in, relatively right on time at that point, and that's just showing you the harmony of the market that's there, and nothing more than that. That's really it's just a pattern. Sometimes they work, sometimes they don't. But this is what we're trying to show you here. When you're looking into Tiger TV, we give you some ideas. Sometimes they'll be in live time. Other times they'll be something that we're looking at in the future. And this is because we're trying to make money at this, and so you got to go into the future to try to make some of these predictions. That's the problem. When you put yourself out there, like some of us do. That you do give an idea of where you think things are going to go, and that's what that's what you're looking at. I did have one other funny thing to have happen, and that was yesterday. We had some friends, some acquaintances, not friends, some acquaintances that have some a few bucks, and somebody from one of the big cities called them and said that they can double their money, in a matter of 2 months. And the people said, "Yeah, I think we're just going to go in and do this." And I said, "Man, you ought to do a little due diligence." I said, because it's a pretty good deal if you can do it in a couple of months like this. And then after they did a little bit of a due diligence, they realized that these people were really not legitimate, which are really hard to believe. Madoff pulled off one of the greatest the Ponzi scheme of all time. And here he was, the leader of the pack there, and at the time at the NASDAQ, and the fact that he was able to do what he did was really amazing. Now, what happened with Corzine and MF Global? They just basically robbed the bank. They just stole the money. They didn't even bother to lie to people and put out false statements and stuff like that. They just took the money and ran, and the money's still out there, and nobody's got it back yet. They've given small bits of it back just to keep people from screaming, but the big accounts have gotten back, really very little. So get back to the currencies here and just look. We need to go to the Treasury bond market now, because we've had some pretty good action in the Treasury bond market today. I understand that Mr. Bernanke was speaking, and that was really nothing more than he usually does all the time. But the T-bonds have basically been doing the same thing for almost a month now. They're in this real tight trading range. Yesterday, the high we made yesterday was a perfect 786 retracement to the exact tick. It was right around that 144.14 level. And now we've had a 2-point correction. When you go into Tiger TV, what you're looking at is a 1-month picture of the Treasury bonds over a 30-minute time bar. And each bar is 30 minutes, and it shows you there's a massive resistance up at the 786 at 145, and a lot of support at the 140 level. Now, if we break the 140 level, then I have to really say that this major cycle in interest rates is over, and rates are starting to go higher. But I still believe that we have a chance to get this market up into this 149 level. And the reason for that is if the market does top here, the stock market, I believe that the money will start to move into bonds, some type of safe haven, flight to quality, and that's what we'll be looking at. Remember now, the Greece thing is pretty much over. No one really cares. I didn't think they would anyway. And the next one will probably be Iceland or Italy, or whichever one they do. But that's pretty much out of the they're not even thinking about it anymore. They'll just keep printing money until it doesn't count anymore. But we'll have to wait and see. What surprised me today. I wasn't surprised so much that the silver didn't react so much from the high, and then gold broke $60. But it happened so quickly. I mean, it was just really really quite amazing that's what that's how things actually worked in a very fast manner. So we'll have to keep an eye on if it in fact holds these levels, because if silver gets below 32 an ounce and gold gets below 1,700, this is going to trigger that this was a big fake out to the upside, and we're looking at a lot lower prices, like Tom mentioned on his show, that these could be a lot lower prices, in the silver and gold. And if you take a look at what's happened with the gold and silver index, it basically has fallen far behind, the reactions in the with the gold and the silver, and this is telling you that the market has been down for considerable amount of time, and this is important because the trend is so down in the stocks for these things. It really makes you suspect that the market on the futures is going to break out. If you get a chance to go into Tiger TV and take a look at the gold and silver index, that I put in there, you'll see that you have three lower tops. You've had 3 Gartley patterns that have all worked extremely well, and the one that it's in right now is also working. So all of those things are telling us that the market is really trending to the downside, and this futures market could have just been a huge fake out. But we'll have to wait and see if that is going to be the case. One of the problems that we've had, that we've talked about all along, is that we've not had a big increase. We had, what little increase we had in open interest in gold has since dissipated. The volume has started to drop again. So there's no new players coming into the market on this last run-up, which is not a good. It's not a good sign. And so we have to keep that in mind as far as what's going on with the players, because if it was really good, these gold stocks, stop and think, folks. The stock market has been going up. I know it's mainly the NASDAQ, but why aren't the gold and silver stocks, going up with the rest of the market? They should be going up with the rest of the market at least a little bit, because, they have a pretty good product, and the product has been going up. So why not, why haven't they gone up? That's the question. Just have to ask yourself a simple question, and there's got to be a reason why they're not doing it. So my assumption is that they're ready to go down instead of going up. So that's all I'm looking at as far as saying things of what's really happening in the market, and so that's what we're taking a look at as we watch these things develop during the day. Now, silver has already rallied $1.50 from its bottom, but frankly, when it gave up so much, it's not really that much on a longer term time frame. Now, I need to spend a little bit of time with the stock market here, because of the fact that I've been preaching about this for a long time, and there's nothing else I can do but preach, because I really believe this strongly. Maybe I beat the drum a little bit too much sometimes, but frankly, we are at a major level with all of these AB equals CD patterns that have happened, and the breadth of the market. I'm going to bring this up one more time. I posted this just a few days ago. It is the McClellan oscillator. It hasn't changed very much. It's basically showing, that the New York Stock Exchange composite has been going up, but the breadth of the market hasn't even close to that channel line that I put in there to show you that there's just not a lot of buying coming in. The volume's not good. There's new high to new lows is looking bad. All of these things. Maybe that it's not going down today, but eventually, it's going to catch up. These are signs that occur that should give you a lot of trepidation. And the one that that we talked about the most has been that divergence that we have between the NASDAQ and the whole rest of the market, and that's the one that I think is really important. And I'm going to bring that if I can get to my desktop where I have to pull this up, and I want you folks to really take a look at this, because the last time we had this occur, where we had such a really bad divergence, was when we were at the 2007 high. And now we are doing the same thing in 2012. 5 years later, we're making the same type of divergence. In other words, the NASDAQ is making new highs going back to last July, and with the New York Stock Exchange Index, which is the real index, that's the real money. If you can't call Apple 500 billion real money, I guess you can't call anything real money. But the it's basically being pulled up by these high cap stocks of the NASDAQ, and it's faking out. That's my opinion. This is the same thing that happened in 2007. And I want you folks to take a look at this in Tiger TV so you can get an idea that this divergence, when it happened before, was a big indicator that you should be afraid because, it's just something that the divergence as big as these that are happening right now don't happen very often, and they're telling you that that is something significant to hang on to. And, maybe this thing's going to go up forever. I'll have to eat a lot of crow again if I do, and I'll be more than happy to do that if I have to. But frankly, it to me, we're at that spot where we're really getting to the point where the market's getting very, very close to turning. And as most of you know, I'm a big proponent of the Bradley stock market model, and we are not very far away from. And remember, the model can shift a little bit by as much as a week or more. And, we're looking at a market that's going to go down for at least into February of next year, if it in fact is the case. I'm going to, give you an idea of what that looks like, and, we'll take a look at it, and we'll see if that's the case. Now, Danny in Atlanta asked me if Apple is a tech bubble. I can tell you by looking at the chart, Danny, it certainly looks like a tech bubble because of the rate of change. It actually has gone straight up, for so long. When it bottomed at around 70 way back in March of 2009, we've gone up we've gone up 8 times the value in those 3 years. So the slope of that line tells you that is a parabolic blow-off, but how high it can go is anybody's guess, because these markets have a tendency to outlast you, when you're doing it. That's why if you do trade it, you've got to go in and, at least have a place to put a stop and not worry, and try it a few times, in fact, if you're going to. Now, I actually, believe it or not, people, I put Apple up there just to show you, so how the patterns work, and it jumps around quite a bit, so it gives you an idea of what it's doing. But it's a great company. I don't think there's any question about it. The man who started it, unfortunately died, very young in life, which, was, very sad because he had so much to give. And, we'll see. But they have great products. It's not as good as my little $15 Walmart, but I'm going to get a text message pretty soon, one of these days, and I'll probably be able to answer it, but we'll wait and see. The reason why I don't do this social networking and Twitter and LinkedIn and Facebook and all this stuff is I just don't understand it, and I'm still not sure that color TVs are here to stay. I'm pretty sure about microwave ovens, but color TVs, maybe not. I don't know. Well, who knows? I'm wandering off a little bit here. It's not easy to do a 1-hour radio show 3 days a week and try to keep it interesting and a little different. So that's why I was, putting. Oh, someone told me that I can be pretty sure that color TVs are here to stay. And I can remember. I can remember the first time I saw color TV, folks. It was 1955 in the World Series. It was at an auto company in Terre Haute, Indiana. And there must have been 100 people in the room watching a beautiful color. It was only, color was horrible, but, in those days it was really something. So anyway, got a little commercial to pay for here, and then we want to get back and I want to talk.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. But you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
See, what we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, back, folks, and what I'm going to do is share a chart with you from one of my good friends in the UK, and he did a parallel channel chart on Apple going back many years. It's a monthly chart, and he is saying that somewhere in this 540 to 550 level, these parallel channels line up. You know, that doesn't mean it can't go breaking through or whatever. It doesn't make any difference where the stock's going to go. Picking a top doesn't really, add anything to your equity run. I mean, no one gets the exact high except one person. So trying to pick a high is not that good. All I did with Apple today was someone threw a gauntlet down saying, take the challenge, what's Apple going to do? All I did was, look at the 5-minute chart. If that chart goes above the 1346 level, we're certainly, 1346. Oh, brother. If it goes above the 13, wow, let's try 546, boys and girls. and then we would certainly have a a losing trade. But right now, it is doing pretty much where it was when we came on the air. As a matter of fact, I saw something yesterday that 5 companies. We had Facebook at 100 million, Microsoft at 200 million, Apple 500 billion, ExxonMobil 400 billion. That's up to $1 trillion. I mean, on the 5 biggest companies in the company. So anyway, let's get back to Apple here on the short-term basis here. Just for educational purposes, it was the same pattern that we had in the euro that worked beautifully. The Apple one hasn't worked yet. It's still in the same area of 543.78. If it gets above 546, this would be a failed Gartley pattern, and you won't, you would take a loss in it at that point. But your profit objective would be down around the 540 level. So you're making $2 for every. You're making $4 for every $2 you're risking. So that makes it a positive expectation on the pattern itself, and the risk-reward ratio is actually still okay. I want to tomorrow's show in the commodity markets. I'm going to have Dr. Steve Shapiro on, who helped me write my first book, Astrocycles: A Trader's Viewpoint. He used to trade with me all the time. He's going to tell you a lot of stories about me. At least that's what he said he was going to do. I tried to put some constraints on him, and he said, nope. He said, I'm not coming on this show if I can't say what I want to say. So it'll be interesting. And he still trades, and he actually does some really good astro work with wheat, and he might share some of that with us a little bit, and we'll see how that goes. I want to end the show with the bonds, because the show we have for commodities tomorrow will be with Dr. Steve Shapiro as my guest, same time, 12 to 1. But the bond market is still doing what I'm expecting it to do, and that is to have one more big jab up into that 149 level, and maybe it goes a lot higher than that, I don't know. But if we go below 140, then that's where the problem arises in the bonds. We're at 140, roughly 143 right now, so we'll see if that in fact is going to be anything to hang our hat on. We'll have to wait and see. But this is what we're waiting to see. Someone else asked me about crude oil. Crude oil went up to that 110 level. We had some really nice patterns down there at that 106 level, where it had some support to coming in. But we'll cover all that on the commodity market show tomorrow, because the thing that happened in silver and gold today with these big corrections are telling us that something really big is happening, and the commodity markets have always in the past have given us some pretty good indications of some of these things. So we'll cover all of those tomorrow, and I want to wish everybody a happy rest of the day, and I'll talk to you tomorrow, God willing.